Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway. Long-term investors are often faced with a choice. Do I go for the higher-priced quality name or the lower-priced value name? We're going to do our best to answer that question today. I'm joined by Hamish FitzSimons from AllianceBernstein and Dougal Maple-Brown from Maple-Brown Abbott. We're going to try something a little bit different today. The gents will be presented with a stock and they're going to share their thoughts, buy, hold, sell, as we normally do. Then they're going to be asked about an alternative and whether they would prefer it. So first up, Commonwealth Bank. Hamish, I'll come to you first. Buy, hold, or sell?
Okay, well, it's a sell.
Yep.
Are you surprised?
No.
No, okay. So we are a defensive equities manager. So we tend to look a little bit unfavourably on banks on average because they tend to be very cyclical, and if the market, they tend to sort of follow the market a bit more. So we're not predisposed to hold banks in large weights in the first place, but CBA is a standout for us. Interestingly, the comment I'd make is that a lot of retail investors feel the same way as me. You can analyse the registers, they release the data and break it up as retail, institutional, local, institutional, international. I'd say roughly 10% of retail have sold their big four bank stocks in the last 24 months, right? They're looking at CBA, they're going 2.6%, 2.7% dividend yield, growth of 2 or 3%, fingers crossed bad debts don't come back or I won't get that. And they're doing other things with their money. So I think there's a lot of different views on this. Clearly somebody's buying it, but we're not.
Yep. Yeah. Dougal, do I need to even ask you or do we just go straight to the alternative?
I don't think so, Chris. We do hold banks in the fund, to be clear. We're heavily underweight banks and we have zero CBA. And there's not many, general funds that hold zero CBA, entirely on valuation grounds. Everyone knows the numbers, over 30 times PE, 4 times book, most expensive bank in the developed world. One broker reckons the most expensive bank in the developed world ever. I don't know how you prove that, but yeah, no, it's a sell and I'm a long-only investor, but if I got short, I'd be thinking about it.
There you go. Let's talk about the alternative, ANZ Banking Group.
ANZ, one of our favourites, is held by the fund and we're heavily overweight. Compared to those numbers I rattled off for CBA, ANZ is on a fraction of that price, 13, 14 times forward earnings, over a bit 1 times book, for businesses which are remarkably similar these days. Yes, ANZ's got a lower ROE, but compared to the valuation discrepancy, we like ANZ.
Hamish, ANZ up just 3% over the last 12 months, so pales in comparison to CBA, but from a value lens, do you prefer that one?
Look, I would prefer it. Yep. We don't own it. We own no banks at the moment. And look, we have in the past held quite a lot of banks in the fund. As I said, they are quite cyclical, so we tend not to be heavily overweight, but right now we actually see them as expensive, all of them, and we have no banks at all in the portfolio, so we're taking a pretty strong position at this point.
Yeah. All right, let's shift focus. We'll focus on the mining space now. So first up, we're going to talk about BHP Group, as the quality name. One of the best diversified miners in the world, if not the best. Dougal, I'll come to you first this time. Cool. Buy, hold or sell?
Now you're throwing me. BHP's a hold. We own it, we're underweight. We're very rarely underweight stocks. It's not expensive. The outlook for China in particular and the world more broadly is pretty fuzzy for us at the moment. So yeah, we've got some, but we're underweight BHP.
Hamish, down 15% in the last 12 months. Buy, hold or sell for you?
Yeah, look, it's a hold and I'm probably similar to Dougal. It's in that fuzzy risk zone, right? I mean, if you cast your mind back just 9 months, the last week of September, there was an impression created by the leadership of China that they were going to stimulate. All the mining stocks went up 15% immediately, like in about 4 days, right? So that can happen again. And I don't know what the leadership of China is going to do, right? 2022, they weren't going to open to COVID. They weren't going to let their housing market crash. Well, by June 2022, both of those things had happened. So I'm not going to sit around and say, I'm sure China leadership's going to not do this or they're going to do that. I'm going to think of it as a risk that I need to manage. So I've got a hold on BHP on that basis. Yeah.
Hamish, if BHP is the quality name, we'll think about Fortescue as the potential value name. Yep. Would you prefer to own that? The
issue with Fortescue is it's slightly higher cost than BHP, so if things get tight, it gets tighter for them first. The other thing is that it's been, if you've been a shareholder of Fortescue in recent years, you've been a little bit less clear whether you're going to get the money or whether it's going to be invested in some other projects, like hydrogen and things like that. And so you're not quite clear where the cash flows are going. So as an investor, I feel a little bit more comfortable about owning BHP. I'm going to get my cash back there. Now, there's always the risk with large cap miners, they go buy something, of course. That's like a never present risk, but it's a different category of risk.
Yep. Dougal, what about you? Would you prefer to own Fortescue?
Yeah, FMG's a sell for us. I agree with everything Hamish has said, which is partly why I'm a sell, but also on the valuations. On our numbers, it's not that much cheaper than BHP, and I think it should be a lot cheaper than BHP. So, no, I'd rather BHP.
Yep. All right, let's shift the focus again to healthcare this time. So first up, we'll talk about one of the companies on the ASX that really gets trotted out every time you're talking about quality, and that is CSL Limited. It's had a bumpy ride over the last few years, coming out of COVID, of course, and then the Vifor deal, which was a bit on the nose. Hamish, coming to you first. Buy, hold or sell for CSL?
Yeah, look, I'm happy to be a buy on CSL. I think, there's a couple of issues. Vifor you alluded to. I've got to put that in context. It's like 8 or 9% of their earnings. And that's getting some issues with the American kind of anti-vax thing. But it's relatively small. We've seen that happen in Florida. The government can do a few things, but at the end of the day, it's doctors prescribing vaccines. So Florida, when they put in anti-vax sort of measures, we're talking a couple of percent, right? So it's not going to help, but I don't want to. It's small, and I don't think it's going to be that big. Flu's more seasonal. Flu vaccines, you get a lot of up and down. That might be more of an issue. The other thing is their really big business, blood plasma, is a fantastic business. The last result was great, right? So they are really kicking goals there. The other overhang, though, is the American administration trying to just lower the cost of healthcare more generally. They're caught up in that a little bit. I think you're getting compensated for the risk. I think it's a very interesting stock to hold.
Yep. Dougal, down 18% over the last 12 months. Does it get there for you?
Yeah, so hang on to your hats here, guys. CSL's been the bane of my life for probably a decade. I was reminding Chris earlier that CSL peaked at over 10% of the Australian equity market during COVID 2020. Today, it's less than 5%, 4.5%. So it is halved in relative terms against the market. And of course, when a stock halves or more than halves, I've got to look at it. So we do. 2020 on a valuation basis, on our numbers, CSL was mad. Peaked at close to 50 times forward earnings. This is the days when interest rates were basically zero. People were telling me they're going to be zero forever. Since then, CSL's had a miserable 5 years. It's been derated considerably. Today, on our numbers, 23, 24 times. For a stock which has got decent growth to it, for the first time in a very, very long time, I'm a buy on CSL.
There you go. If CSL is acting as the quality name in this pair, we'll talk about ResMed as the value name. Dougal, it's had its own problems, especially around GLP-1s and potential thinning of client base, or that was the message that was being passed. Would you prefer to own ResMed over CSL?
No is a short answer. On our numbers, CSL's cheaper with more growth, and I still view ResMed a bit as a one-trick pony, which worries me. If someone invents a better mousetrap, then that's a risk. That's always been the case with ResMed. We did actually own it last year on the GLP-1 scare. Unfortunately, that got priced out pretty quickly. But today, at today's prices, it's backed on 30 times forward earnings. As I said, I can buy CSL on 23, 24. I'd rather CSL.
Yep. Hamish, what about you? ResMed as the alternative to CSL. Would you prefer it?
Yeah, well, look, I'm going to put on I'm a defensive equities manager hat here, right? And I think ResMed's just got a lot less clouds on the horizon right now. And we do put quite a lot of value on that. The American administration trying to lower healthcare costs in America, they seem to have been exempted from that, whereas CSL is still somewhat in the hitting zone. So I think as a defensive equities manager, I'm more predisposed to buy ResMed in this instance, but I do look upon CSL quite favourably as well, to be fair.
Yeah. All right, last up, we're going to talk about the consumer staples space. So Woolworths acting as the quality name. I believe it has the most market share, might not be performing the best. Dougal, buy, hold or sell for you?
Yeah, Woolworths, I'll put it on as a hold. We own Coles, we don't own Woolworths today. But it's definitely coming up on the radar. Why is that? Woolworths has had a miserable few years. It's been derated considerably. Back in COVID, it traded at over 30 times forward earnings. Today, it's been derated to a similar multiple to Coles, 23, 24 times forward earnings. They're pretty similar businesses. I still think Coles is doing a bit better on the execution, but that comes and goes, as we all know, over time. So I'll rate Woolworths a hold.
Hamish, what about you? Buy, hold or sell on Woolworths?
Look, we're a buy. Defensive equities, Woolworths is a pretty stable company. They've had a few things thrown at them, brought the price back, as Dougal alluded to. But at the core, it's Australian supermarkets. That's 90% of what you're buying. That's going to grow along with the Australian economy over time. It's going to have its ups and downs, but that's a good business, and they're competing very well online. They've seen off Aldi. They're doing better than Metcash. So I think it's a buy if you're a defensive equities manager.
Yeah. Let's talk about the alternatives now. There's a couple of options to choose from: Coles and Metcash, both of which you've already alluded to. Do you prefer either of those over Woolworths?
Well, interestingly, we hold 65 stocks in the portfolio, and we do prefer defensive style equity. So we actually hold all three of those.
Right. Yep.
I think Coles has put a lot of investment in a few years ago, which is really starting to pay off for them. We've got a nice stable management team, very clear organisational structure. They're doing very well, so we like holding them as well. Whereas Woolies is, they've had New Zealand issues, they've had Big W issues, they've had management change issues, a lot of other things going on. But and Metcash supermarkets, they've held their ground pretty well against the big guys, particularly coming out of COVID, but they've also got a lot of hardware going on, and they should be beneficiaries of a declining interest rate cycle as housing development picks up as well. So they've got that little differentiator on the side, as well as quite a nice grocery business in the middle. So we think all of those things are quite defensive and should actually give you pretty good earnings growth over the next couple of years.
Yeah. Dougal, you mentioned before that you do hold Coles, so we know that one. Metcash, any interest in that one as well?
Yeah, no, definitely we hold Metcash as well. It's the cheaper play of all of them. I do make the point though that Metcash fundamentally is a distributor rather than a retailer. So a distributor has much smaller margins, so it's not the quality of the Woolworths and Coles. Totally agree with Hamish. Metcash has now got three good pillars, which makes it a better business than it was even a couple of years ago now, with some cyclical upside should rates go down as people are forecasting.
There you have it, folks. We managed to squeeze quality and value into the same episode. Massive thanks to Dougal and Hamish for participating in this entire round of Buy, Hold, Sell. If you enjoyed this episode, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.